Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the macro bullish scenario where we're looking on the weekly time frame for a double 1-2 and now a wave 4 retracement. The target area for this wave 4, after which we expect continuation to the upside in a wave 5, is the 0.5 to the 236 Fibonacci taken from the low of 2 to the high of 3. Giving you a target area between 63.3k and 53.3k, with the invalidation sitting at the 0.618 49.3k. Zooming into the local range, we are then looking for a regular flat structure, after which we expect continuation to the upside, as this then would end a wave 4. The common target for a wave B in a regular flat is the 0.9 to the 105, and as you can see, the 0.9 has been hit and respected, taken from the high to the low of this wave A. And inside this wave B, we are then looking for an impulsive structure to the downside, where for a wave C, the minimum target is price moving below this wave A, which on my chart has not yet happened. Now, I do realize that on other charts it did, but that just increases the probabilities that on the Coinbase chart, we will also still take this low. The common target area for a wave C in a regular flat is between the 1 and the 1.236, taken from the high to the low of A to the high of this wave B, and an extension target is the 1.618 at 51.6k. When we look at support, then currently we are on the target box over here, 61.8k, 62.9k, giving a little bit of a reaction here locally. But to the downside, we also have the weekly gap, where on the weekly time frame we created a gap. We have a weekly candle move up and then another weekly candle, and the high of the gap is at 59.2k, which is important support as well. If we start closing daily candles below 59.2k, it increases the probabilities to fill the gap to the downside and reach 53k, and then we get very close to the extension target, the 1.618 over here. And with the 1.618, we also have another support box here, 51.6k to 51.9k. After this wave C, we are then looking for continuation to the upside. So we want to see some proof of support and then price continuing impulsively to new all-time highs. Locally, if we then zoom into this structure here, we're looking for an impulse to the downside where we still want the low of this wave A to be taken, which can be done in this way. We have the blue count here, which is the higher degree Elliott wave count, 1, 2, 3, 4, and then we're looking for a wave of 5 to the downside, and after wave 5 we then want to see continuation to the upside. Inside wave 3 we then have our 1, 2, 3, 4 and wave 5. The common target area for this blue wave 4, taken from the high of 2 to the current low that we have, is between the 236 and the 05. Now we already hit the 382, so I removed the 236 from my chart. So the 382 and the 05 is 64.8k to 66.1k. The invalidation for this wave 4 is price moving towards the upside and hitting the 0.618 at 67.3k. Now, after this wave 4 in the flat scenario, we are then looking for price to move towards the downside for a wave 5. The bearish scenario on the weekly time frame is a flat in a 3-wave A, 3-wave B, 5-wave C to the downside, after which we expect continuation to the upside. And also here we are looking for a regular flat, but then on the weekly time frame, where the target for a regular flat is between the 09 and the 105, taken from the high to the low of A on the logarithmic scale, 69k to 74.3k. After wave B, we are then looking for a bigger impulsive structure to the downside in a wave C, where for a regular flat, your minimum target would be the low of this wave A. But that also means that on the lower time frames, we are looking for an impulsive structure to the downside, because if we can't count an impulse to the downside here, the probabilities are low that this is the end of your wave B, and this is the beginning of a bigger wave C. So if we then zoom in to this range here, then the probabilities for this structure to the downside to be a impulsive structure are lower than a corrective structure due to all the overlap that we have. And even if we would think of a diagonal, then your wave 3 here is the shortest wave structure in a 1, 2, 3, 4, 5 between wave 1, 3 and 5, which isn't allowed. So the probabilities are higher. This is corrective than impulsive, but of course we have to be prepared. But secondly, the 886 is very important, and this actually really influences the probabilities for this scenario, because a 886 touch is very rare for a wave 2, common for a wave B or a wave X, increasing the probabilities that any move to the downside coming off the 886 is a wave C or a wave Y. That in turn increases the probabilities that anything here is corrective and we are looking for new all-time highs. So because of the 886 touch here, probabilities are a lot higher that price is still going to make new all-time highs. Of course, we continue to observe what price is doing, but that is Elliott Wave probabilities for you. Now, in this scenario, we would be looking for a wave 3 if we're looking for a big impulsive move to the downside, where preferably these ranges here are then 1-2s, 1-2, 1-2, 1-2, and eventually you want to see a very big wave 3 towards the downside, where generally a minimum target for the wave 3 is the 1.618 at 51.6k, but the wave 3 can easily extend to much lower prices. On the lower time frames, I usually keep an eye on CVD, but because overnight we dumped, I want to give price a little bit of time to range, and then we'll look at the CVD again at a later stage. So if we then look at the probabilities of the different scenarios, then on the weekly time frame, the probabilities are higher for the bullish scenario, where we are looking for a wave 4 and a continuation to the upside in a wave 5. And that's also because locally we have hit the 886 over here, which increases probabilities that this high is a wave B or a wave X, and this move to the downside is a wave C or a wave Y, because the 886 is very rare for a wave 2 but common for a wave B or X, increasing the probabilities that at a later stage we move towards the upside. Now, in this local range, the probabilities at the moment are highest for a regular flat scenario, where B is in. We're looking for a wave C, preferably also on this chart, moving below wave A, looking for at least another 5 towards the downside to hit the target area of C, or potentially the extension target. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.